We are living through the great transition in human history. First, we automated our hands with machines. Then we automated our memory with computers. Now we are automating our money. Every civilization reaches a moment where control is handed to the next evolution. And in 2025, that evolution is financial. This is the moment that capital begins to manage itself. More than 60 trillion in global equities already move each year without a single human click. Algorithms now roughly execute 90% of all US equity trades. It's no longer humans moving capital, it's capital moving itself. Now the question is, when does human decision making stop being an advantage and start becoming a liability? Let's talk about some patterns of evolution, because history moves in patterns, roughly every 80 years. The old system gives way to a new one. In 1780, markets replaced monarchs. In 1860s, machines replaced manual labor. And in the 1940s, computers replaced clerical minds. Each shift was met with resistance, then inevitability. At first, new technology feels clunky, unreliable, laughable. Then suddenly it reaches a tipping point. I'm pretty sure we all remember that one AI clip of Will Smith eating spaghetti, and then just moments later, and everything that came before looks pretty much ancient. The steam engine, electricity, the internet, each one erased what humans thought was permanent. And the same cycle is repeating now, but in finance. Intuition once guided investment decisions, intelligence now guides them. Not human intelligence, but machine intelligence. Efficiencies always win, because progress never argues, it just performs. And even better. Now let me refine everything. Let's talk about what's really happening in the tipping point for finance. For years, algorithmic trading was dismissed as experimental, or better yet, too technical or too niche. It was the internet in 1995 or the smartphone before the App Store. Then something happened. Performance, accessibility, and scale all converged. Now they crossed the line from experimental to dominance. Today, 85 to 90% of all markets volume is executed by machines. Quant funds have outperformed traditional managers by 20 to 40% on a risk-adjusted basis. Robo-Advisors already manage more than 4 trillion and are growing 30% year over year. Deloitte forecasts that by 2030, AI-driven funds will oversee nearly 30 trillion in assets. The results speak louder than our opinions. Renaissance technology has averaged over 60% annualized returns for a decade using algorithms alone. Or better yet, BlackRock's Alden system runs 200 million simulations daily just to balance risk. Citadel processes more trades per second than every human broker combined. The markets have already chosen a side. And unfortunately, it's not us, it's the machines. So here's why algorithms win over humans. Humans were never designed for perfect rationality. We evolved to survive, not to allocate capital. Every investor, no matter how disciplined, carries the same flaws: fear, greed, biases, and fatigue. According to the Dalbar study, retail investors underperformed the S&P 500 by an average of 3 to 4% annually, purely due to emotional timing errors. Behavioral economics calls the cost of being human. We panic when we should stay calm. We chase trends when we should wait. We sell way too soon, and we hold way too long. Daniel Kahneman once said, "Humans are not built to make consistent, probabilistic judgments. Algorithms are. They don't get tired, they don't fear a recession, they don't check Twitter before a trade. They calculate, they iterate, and every single mistake makes the algorithm stronger." When Garry Kasparov lost to IBM's Deep Blue, it wasn't the end of chess. It was the beginning of pattern recognition, outperforming intuition. Today, that same dynamic plays out in global markets. And in finance, emotion is the tax on intelligence. And algorithms stop paying that tax the moment they started. You see, right now, we've entered an age where autonomous capital, where money allocates, manages, and compounds itself. This isn't about humans using AI. It's about AI replacing humans. In 2010, quantitative funds ruled Wall Street. In 2020, machine learning refined them. Now by 2030, capital will become self-directed. BlackRock's AI system already runs 10 million portfolio stress tests every single day. Bridgewater's algorithms monitor thousands of macro variables in real time. The world's largest institutions are quietly removing human discretion from their models. Here's what's different this time. This revolution isn't limited to hedge funds. For the first time in history, retail investors can now access the same intelligence once locked behind multi-billion-dollar walls called funds. With platforms like Nurp, everything I talk about on this channel has democratized these kinds of softwares into the hands of everyday retail traders and investors. I'd like to talk about this new civilization of money. Every revolution shapes the world that surrounds it. Steam reshaped industry, electricity reshaped cities, data reshaped communication, and now algorithms will reshape the architect of money itself. Markets no longer close. Liquidity flows 24/7. We have never been exposed to markets that are able to flow 24/7, 365. Now we have crypto markets that continuously truck along no matter the holiday, no matter the time of day, no matter about any variable, these markets continue to move along. That means capital is evolving into an intelligence organism, and these machines behind moving it are sensing, learning, reallocating all in real time. The IMF estimates that AI could raise financial sector productivity up to 30 to 40% by 2035. The World Economic Forum predicts that half of all banking operations will be AI driven by the end of this decade. This will change everything from regulation to taxation to the very definition of work. Because when capital compounds without constant human input, the line between investor and observer begins to blur. Who truly owns money when money can manage itself? We're standing at the edge of an entirely new civilization of finance. A civilization where markets no longer react to human behaviors. Humans react to the market's behavior. So we're at this crossroad. It's adapt or be managed. Every 80 years, civilization reinvents its relationship with money. This is our cycle. It's already begun. Those who cling to intuition will be managed by those who mastered automation. The smartest investors will no longer be a person, it'll be a protocol. The future of wealth will belong to those who understand that emotion doesn't scale, intelligence does. This access is no longer gated. And for the first time, the algorithms that moved trillions can now work for the individual, quietly and intelligently. And most importantly, without your effort. The only decision is, are you going to use these softwares moving forward into the future inside your portfolio? Because after that, the software is going to execute the vast majority of all decisions. And these models are only getting smarter. So the longer you wait, the better they become. And that might just mean the harder it is to get involved with them. We are not witnessing the end of human investing. We're witnessing the beginning of post-human investing. The age of autonomous capital is here. And truth is, it's only just begun. If you want to find out more about these softwares, check out any of these videos on this channel where I go over a couple softwares that I'm personally using with my own capital and documenting the proof right here for you guys. Or if you just want to speak to a member on how any of this works, the description has a link. Go ahead and click it and book a call with the team to ask any questions you'd like to see if this could potentially be a portion of your portfolio moving forward into the future. Thanks for watching.